Welcome back guys to another video, and in this video we're going to be talking about all things regarding Ballarat. Now for those of you who don't know, I did a video on Ballarat almost 12 months ago back in December of 2024, and since then the market has absolutely changed. It has flipped on its head. And looking back at my old video of Ballarat almost 9 months ago, I started looking at the comments before recording this video, and this one person caught my eye. Gem6441 said price is still trending down. I said yes, it could present a good buying opportunity, and he said or a falling knife, which is valid, right? You don't know how long prices could be falling for, but then you also do need to understand how to spot a good opportunity. And the reason I bring this up is because when I look at my other video of Bendigo versus Ballarat, that person has left another comment now that says Bendigo and Ballarat is too late now. So in the space of 9 months, we went from a good buying opportunity to it's too late now. But I'm here to tell you that Ballarat's opportunity is still there, but it's a lot more competitive. And like always, I'm going to go through every single thing about the suburbs to look at what is happening in the market right now, the economy, an example of a property, and more. So let's get straight into it and look at the data. Now, Ballarat, your median buy price is around $533,000. Now, realistically speaking, you need about $500 at minimum, and to get a good quality property, you're looking more at the range of $600,000. Now, the yield is also sitting around that 4% mark. Some deals will get you up to 4.5. Some deals will get you lower to 3.5. So you have to really pick the right deal if you're investing into Ballarat as an investor. And when we start to scroll down, we're going to look at the most important thing, which is supply and demand metrics. And you can see the typical price over the past quarter has seen a positive change of 1%. So we are no longer at the bottom of the market. We are starting to see a resurgence in Ballarat. And when we start to look at the supply and demand, we can see stock levels are starting to rapidly reduce. That means less and less stock is coming onto the market. And with days on market, we can see that there's an increasing demand trend as the days on market continues to fall every single month. Now, what you will notice as well, the vacancy is sitting around 2%, which is a little bit high for a region. We're generally trying to aim between 1 to 2%, but it is a trade-off at the moment for capital growth. Of course, you have to weigh it up against your own risk appetite. And only on HTAG can you view that the stock levels are dropping. You can actually go onto SQM Research, search up the postcode, and you can see that over the past couple of months, stock has been dropping down. And that is also coincidentally, we're seeing that house prices are starting to increase in the area, all of which are positive signs as an investor. So what suburbs should you be considering? Because I know for those of you who watch my videos, some of them are only interested in what suburbs to choose. Well, I'm going to go through them. Now, the first suburb you can look at is Delacombe, around 572 buy price. And just to show you the data behind some of this, ERSAT score of 2 and a healthy renter to owner occupier ratio at around 26%. You can also see that affordability is very good at 30 years, and that we can also see that stock levels have absolutely plummeted over the past couple of months, and demand is continuing to increase. And here the vacancy is a little bit tighter around the 1.3% mark, which is a good sign to see. Another location in Ballarat you can consider is Windery. Now, Windery is where you can find those properties around that 450 to 500 mark. It is getting pretty competitive out there, so it might not last for very long. You can get a yield of around 4 to 4.5%. I will show you an example later. And once again, you can see house prices have really started to resurge in this suburb. One thing you will notice is that rents haven't been rising, and I will touch on this a little bit later about the risk. Now with Windery, the renter to owner occupier ratio is at 43%. So that means there's a lot more investors in this area, which coincidentally means that rents are harder to rise because there's just more competition. And affordability is a little bit lower in this end, where it's sitting at around 35 years, which is still acceptable. And once again, stock level, demand levels are a tick for us as an investor. Another option that some of our community members are looking at is Sebastopol, with very similar metric. Prices are rebounding. Again, that higher renter to owner occupier ratio, which isn't favorable, but if you're an investor, you need to make trade-offs and decide which suburb is good for you. Affordability is sitting closer to the 30-year mark, and once again, stock levels have dropped. Demand levels have really picked up. So when you do enter these markets, expect there to be more competition these days. Another one where our investors are looking at is Mount Clear. Here the yields are quite on the lower side, around 4%, which also means that the buyer price is a little bit higher around the 600k mark. Obviously, there's not a direct correlation, but generally speaking, the higher the price point, the lower the yields is what we find. Very similarly, house prices increasing, rents, again, just not that enough. It's only 1% increases. Affordability is very good, 30 years. Again, a very healthy renter to owner occupier ratio of around 30% and a much higher socioeconomic score of 5. Now, stock levels are starting to reduce. It's not as steep as some of the other suburbs like Sebastopol, Windery, and Delacombe, and it's partly because those other suburbs are much more affordable in terms of a certain price point compared to Mount Clear. But once again, this is a location that is seriously starting to pick up some steam as well. Another location is this one right here. Again, on that higher price point around 630,000, much lower yield around 3.5%. Again, guys, you need to pick and choose the suburb that suits your needs, right? 3.5% yield is very, very low. It's something that I usually wouldn't recommend people to go purchase because the cash flow is going to be absolutely shot. But if you're looking from a purely capital growth perspective, these will do numbers. Stock levels absolutely dropping and demand levels are also rising. And not to keep going through all the suburbs on the data because that is generally what it looks like. Some other locations we are looking at is Canadian up here. You can also look at Ballarat North and Ballarat East, which is also starting to pick up, and Soldiers Hill. In general, though, Ballarat as a location has really started to pick up from an investment opportunity. We are seeing capital growth actively happen month on month. So if you want to get into the market, it's better to get in now rather than wait 6 to 12 months down the track where prices would have gone 10 to 20% and yields would have compressed much lower. You don't want to be late to Ballarat because the investment opportunity here is extremely small. Now, just before I go any further, if you guys haven't already, jump into the private community. We have over 350 members in the community helping each other out, picking the right location to invest into, making sure that the investment location they choose is the one that suits their needs. No point blindly picking a location. You need to fit it to your strategy, and there's no better place than to get it right here in the community where you get personalized mentorship, deal vetting, and over 30 plus engaging videos and mini courses and suburb breakdowns, guys. You'll be a fool not to join. If you're spending $500,000, you can't even spend $35, guys. So jump in the community. We'll help you out. If you have any questions, leave it down in the comments below. Let's get back into the video. Now, the next thing I want to do is cover Ballarat's economy. Now, you can see it is sitting around 121,000 people with around 57,000 jobs and an economic output of $21 billion. So it's not some small regional town like Ararat or Hamilton or Horsham. It is a large regional hub, right? Hosting over 120,000 people. It is extremely close to Melbourne CBD. And then when we start to look at the economy and break it down by industries, you can see it is very healthily diversified into healthcare, education training, retail trade, construction, manufacturing, and more, with no sector taking up more than 25% of its economic diversity, which again is a huge plus for us from a long-term investment standpoint. And then when we go a little bit further and look a little bit deeper, you can see its economic output is primarily tied to manufacturing, construction, and healthcare. And once again, it is not primarily dominated by one sector like mining, for example, which you often find with smaller regional towns. But Ballarat is not that. It is well diversified. There's a good location for people to live in. If they've got many jobs, they've got great opportunity. So from an economic standpoint, it is looking very healthy. And to even stand on that point, when we start to look at the unemployment rate of the city of Ballarat, you can actually see that it has been dropping since about December of 2024. City of Ballarat, September was sitting around 4.7. It's now dropped to 3.4 or so in March of 2025. A little bit of an older statistic, but nonetheless, a low unemployment rate is very good for us to see. We want people to have jobs. We want people to be able to pay rents in the local area. So a lower unemployment rate is a very good sign for us. So from an economy standpoint, it's looking very good. From a suburb standpoint, we know capital growth is happening in this area. From a cash flow and yields perspective, who knows? It's not probably the best because I'm going to show you an example of it. Now, you can see, now I have put some filters here, house up to 500K, because I just want to show you what sort of affordable properties you can buy. You know, this one was sold for 465. Obviously not the best condition, definitely needs some reno work internal, but there are other opportunities around 390, 455, 460. A lot of them are being sold off market now as well because there's more BAs in the area purchasing property, so you have to be quick. But if you just take this one here, for example, this one is $460,000, a 3x1 property, a brick home. And when you search up this property, it's not ideally located. It is on a main road and a corner block, but these sort of properties are good from a subdivision standpoint of building townhouses or duplexes, because a corner block, you've got multiple points of entry. So from that point, it's a good property and a great investment perspective, essentially. But I'm not just talking about the property here. I also want to look at the rentals. And generally speaking, for a 3x1, you're looking at 370, you're looking at 390, 420. So really sitting around that, $390 to $420 mark. So when you put that into your investment calculator or property portfolio summary sheet, you can see the purchase price is $460,000, around a 92 deposit if it's at a 20% LVR, with stamp duty of around $23,000 to $25,000. Now, I've put a conservative estimate of around $390 per week, which gives you a yield of about 4.41%. Again, this is not very high, but it's a better deal for Ballarat standards. Generally, you'll find the yield sitting between 4 and 4.5%. I really wouldn't be purchasing properties anything less than 4% because it just shoots your cash flow and stops your ability to scale your property portfolio. So you really want to be looking for the right deal, and the right deal sits closer to that sweet point of 4.5%. Now, when you put in the additional cost of insurances, council rate, and stuff like that, negative cash flow of around $15,000 per year, or about negative $10,000 after your tax considerations. Look, it's not the worst, but it's not the best by any means. And generally, you're sitting around that negative cash flow around 10 to 15K for most regional locations across Victoria, apart from a couple of them like Shepparton or Latrobe or Traralgon, where the yields are sitting around 5.5%. But Ballarat is one of those larger regional hubs, well diversified, and the cash flow may be a trade-off that fits your bill, but you have to make that decision based off your investment strategy. So for those of you who want an update on Ballarat, here's my final opinion. It is cooking, right? There's a lot more investment opportunities here. There's a lot more investment eyeballs from big buyers agents who are buying up the affordable properties, right? You're getting properties anywhere from $450,000 to $550,000, which will yield you around 4.5%. So there's definitely opportunity here for you guys. It's a large regional hub, extremely close to Melbourne CBD, and there is great opportunities here. Of course, make sure you align your investment strategy with the location you choose to invest into. But for those of you who are looking at Ballarat, you want to be in the market sooner rather than later, because once property prices start rising, the yields will start to get worse, and then it becomes much harder to find a reasonable property to purchase here. Now, one risk I did want to talk about Ballarat is the lack of rental increases. Now, across all the suburbs across Ballarat, you're going to see the rental increases of around 1 to 1.5%. Some are below 1% over the past year, which isn't good at all. Now, this is a problem. And the reason it's a problem is that because without being able to raise your rents, you will not be able to cover maintenance costs, additional expenses that come up, or interest rate rises. Now, this will also become harder in the future, especially over the next couple of years, as more investors buy into the market, which means there's more rental properties on the market, which means there's more competition and tenants have options. And that makes it harder to raise rents because they can always go to another property. So this is an important factor to consider, that when you purchase in Ballarat, your cash flow situation may not improve in the short term. So that's something you will have to consider if you choose to invest into Ballarat. And remember, guys, we were talking about these locations back in January. And if you want to be picking the right locations to invest into and being ahead of the curve, then jump into the private community, because we will be there to help you out. There is so much resources jam-packed for such a simple, affordable membership. You don't want to be a fool. Don't miss out. Till next time, thank you very much.